last week, the USDA gave us their first um, um, outlook of what the 21-22 marketing year is going to look like, and they made some assumptions and some adjustments, and so we're going to play that game with them and look at kind of what the market's doing and how it's digesting all of the information. So before we do that, before I get into the crops one by one here, what I want to start with are the spreads, because I think the spreads are really interesting and telling us a really important story um, as the planting season kind of gets into that critical, final third piece. And I think this is the part where this spread really matters the most. This is November beans divided by December corn, and the last few weeks of the planting season are when the major acreage shifts. So when the USDA came out and basically said, "Hey, we're short corn, guys. We've got a problem." Corn immediately went to work. It raised its head and it collapsed the spread by rallying. And beans rallied too. Corn just moved further, and so it really wanted to go after the acres that the USDA didn't say we're going to get planted. And now we've seen that spread just totally do an about face, right? We went from 262 all the way down to 224, all the way back up now to 26, which is really interesting. And we've got analysts out there throwing some crazy numbers out as far as how many corn acres have really shifted. Now, remember that in the history of the USDA cycle, going back, I don't know how far it goes back, 30 years at least, probably 40. But the biggest acreage shift from the March planting intentions report to the June 30 report has only been 4.5 million acres total between corn and soybeans of an increase. And we're going to show you what some of the analysts are talking about on the spreadsheet, because it's a lot higher than that. And so I think the market's got an interesting job to do. And before we get into that, I just kind of want to preface everything that the market's doing and everything that the USDA is saying with one principle, which is markets can't run out of food. You can't go negative on your balance sheet. And so the USDA, they have a secondary vested interest in ensuring cheap food to their people. All governments do. A core tenet of economic and social stability is having food available and affordable. And so why would we expect the USDA to do anything other than reinforce those basic governmental tenets? And so I don't think anybody was truly surprised at the at some of the assumptions that they made in the games that they're playing. So with that, this spread is telling you, oh yeah, we got some corn acres. Market thinks we've got what we need for now, and now we got to turn our attention back and make sure that we don't switch anymore. So I don't think this is necessarily buying new bean acres. It's just not buying corn acres anymore at the moment. The other thing that I think is really interesting is the Kansas City wheat spread. So this is July wheat versus December versus July corn. And if I go back to the monthly chart and go all the way back to 1976, this is the cheapest that this spread has ever been. And so basically, I don't think wheat has traded at all off of its own volition or its own fundamentals. I think wheat has solely submitted itself to corn and is just extending it. We're trading anywhere from 82 to 92% the value of corn in the cash markets, kind of depending where you are and what your basis levels are. And so what that means is that we're feeding a tremendous amount of wheat. And it's not just wheat that we're feeding. I was talking to somebody that does manages books for feed yards kind of all over. And every time they start a new pen, they're changing the rations from wheat to barley, back to corn. They're all over the place, and the reason they're doing that isn't isn't because they want to. They're changing the rations because they can't get supply. And I think that's one of the things that's important to realize too, is that in the basis in the cash markets, if you don't have it available, then you don't need to bid up for it. You need to bid up for it when it's available and you need to get it. And so just because a Milo bid collapses short term, that doesn't mean that Milo's bearish. It just means that area ran out and they can't source anymore. So now what do? You got to go change your rations. You got to start buying wheat and do this other stuff. So wheat has extended corn here significantly, and I think it's setting up for a massive wheat rally that's going to shock all of us when it comes to light just how much wheat we've been feeding. And I'll preface that by of our farm clients that we manage, we've been getting cold called by feed yards to buy wheat for June, July delivery. That has never happened. Feed yards typically go to third-party resellers. They don't cold call the farmer repeatedly begging for wheat because they're trying to source their food stuff. So, all right, let's keep things in perspective. Here's your weekly chart of corn. We've been straight up, right? We've rallied from $3 all the way up to $7.71, and now we've taken a break. We've sold back off. This is not a reversal here on weekly corn. This is a pullback. So I've got these numbers up here because what they tell you is which direction the trend is, right? We look at trend analysis from a couple of different perspectives, and every perspective that we look at is confirming our uptrend is still intact. And this decrease or the sell-off is a correction that we need to have in order to sustain and maintain higher prices. So if we pull this chart back, in fact, I'm going to do that by switching it to a monthly chart and give you a look at exactly what's going on. We've been at these levels just a couple times in history. We've only been up in this level of the atmosphere a couple times. And so it's natural for us to get really choppy up in here. So I don't subscribe for a second to the logic that, oh, we got up here, we failed, we're done, we're going lower, we're never going to be back here again. It's going to be another 10 years before. That's not at all what this is telling you. What this is telling you, what this is telling us at the moment is that we're setting up for a really, really good buy opportunity and a parabolic move higher. And I think we've got to have a little bit of a weather issue to really accelerate it. But the fact that we've traded up above here and violated this blue line is really significant on multiple time frames. So we did it on the monthly. I just showed you the weekly, and we also did it here on the daily chart. Let me get this line up here and get my sequential up here. So remember when we talked last week? Oh, I'm on my wrong chart. We got to get back to this one. Remember when we talked 2 weeks ago? We talked about this blue line right here. So I'm showing you December corn, which is under pressure again this morning, right? And I'll show you why here in just a second. But the fact that we violated this is an extremely bullish signal. Even though we didn't hold it, it didn't invalidate it. So I think the market's got a big whipsaw reaction because the weather kind of turned friendly and that kind of thing. But I don't think we should be suckered into it given the structure of every chart that we're looking at on every time frame. Okay, I'm going to jump into soybeans. Soybeans, this is July beans. We'll look at Novi's here in a second. These are catching up to corn and wheat here just a little bit. We finally broke this April 27th high yesterday at the close, and so we're having some follow through selling to that. Again, beans are highly extended. We've been up into some pretty thin air, places that we haven't been to in a really, really long time. Here's your weekly chart of beans. It looks identical to corn. We're tracing ones. We're holding our clouds. Yes, we're going to have a pullback. We knew it was coming. We know it's going to happen. You just don't know how deep or how long it'll last. But given the overall readings we've had, I think it's shorter rather than longer. And so, because this isn't a reversal either, we got a doji star with some follow through, but that's in conjunction with everything else we look at. There's no divergences, and there's no reason to think that a major top has been put in. I think we just got to break it. We got to reset it before we push it higher. Because if I show you the monthly chart on beans, it's the same situation as corn, right? We've gotten up into a level that we haven't been to very many times. So you should expect to see chop, and you should expect to see volatility, and you should expect some whipsaws as this thing kind of unfolds. So I don't see anything bearish on this chart at all. Clearly, we're having a reversal week this week, but that's okay, right? We knew that was coming because we're catching up with the rest of the crops. But everything about this chart from a monthly and a weekly standpoint tells you just to be patient and don't overtrade it. Don't let it suck you in like it's trying to do with everybody else. All right, now I'm going to turn to our balance sheet because I think this is front and center. Okay, here's what our May balance sheet said. This is the first look at what the new crop did. And I'm going to call your attention to the middle line here because this is the balance sheet that the USDA gave us, okay? Took it straight from there. They're telling us that we have a 1.5 billion bushel carryout at the end of 2021, which is forecasted out through next September, right? September of 22 is where they're saying this number will end at that point in time. They're saying that our number from last September or for this September coming up will be 1257, which is down from the 1352 number that they gave us prior. Okay, so they decreased the carryout from old crop, from last year's crop. And they've told us that next year's crop is going to have 1.5 billion. Now, what's interesting is that what they also did is they decreased demand by 300 and some million bushels from an export standpoint, which is shocking given the pace of export sales that China's been having. But we're going to give them that. We're not going to overplay that game. We're going to just let them. We're just going to assume that they're accurate. And what I want to highlight is these lines right here. I want to highlight area planted and yield, because we've been saying for several weeks that the pressure on this yield number has never been higher than what it is this year. And let me show you what this means, right? So the market's kind of trading these numbers right here. It's trading something between 1.5 billion and maybe 2 billion because Informa came out and said, we're going to plant 97 million acres of corn. We're going to increase our planted acreage by 6 million acres because high prices are farmers are just going to go plant it. It's been dry, planting conditions have been really good, prices are high, therefore farmers are going to plant corn, and we're going to plant over 6 million acres. Okay, that's fantastic. Let's go with that, and let's hold our carryout exactly where we are. And let's live in fantasy land and say that that China is going to buy less corn than what they've subscribed to, even though their prices are over $11 a bushel. Okay, so let's continue to play in that realm, and let's assume that we have an all-time record crop by 3 bushel an acre. And if all those things hold true, then yes, we do have a large carryout. But what if we only increase our acreage by 3 million acres? And what if the USDA is not quite right, because we already know that the export number that they have for this year in the feed numbers in ethanol and in feed are higher than what they've represented. And we also know that the safrinha crop is not getting any bigger, right? We know that the weather has not been good in South America. So given that we know that some of those things happen, let's assume that maybe they're a little bit high on their old crop ending balance sheet, and let's assume that maybe they're a little bit low on what we're going to use for this year. So this is just adding about 400 million bushels to the usage side and adding 3 million acres, and we don't move our number. So it's really fancy what they did there, right? They added 3 million acres and then kind of played with the numbers, and we have consistency. And if you look at what they're doing, in my opinion, is they're holding this magic 10% stocks to use number, because that seems to be kind of the crisis point. Below 10%, we get nervous. Above 10%, we feel like we have plenty. So they've adjusted the numbers and played with them to make sure that we have just enough. But what they don't really account for is, what if we have a yield drag of, let's say, 5%? Well, now we're talking some really different stuff, right? Now we're talking a yield drag of 5% against a 179.5 still gives us a top 5 yield nationwide, and lowers our carryout to even with the 6 million bushel acreage increase, puts us to 10.7. And look what it does if we're right on our ethanol grind and we're right on our export pace. It takes us below 5%. But what if it's more similar to what other years have been, when we've had similar soil moisture and drought monitors, and you have something more like a 7% decrease in yield? Well, now you're talking some pretty nervous traders, right? Because then at that point, even with a 6 million acre increase, you're below your critical 10% threshold. Well, what if we mimic 2012 when we have a 10% decrease? Now you've got an apocalyptic problem, which is a negative corn balance sheet, which we know from our basic tenets of, you can't have expensive food and you cannot run out. Therefore, this cannot happen. So the market won't let it. It will rally to a point where it kills demand, right? This is why we're not nervous about new crop corn yet, because there's way too many variables at play. And that possibility of that happening is too real when you look at where everything is pointed. Now let's look at soybeans, right? If you take the same yield hit from a soybean perspective, soybeans have a real problem. 2 of our 3, any yield hit at all, even with a 4 million acre increase, you're still negative on soybeans. Using the USDA's numbers, you're still negative. And then if you only plant 2 million more acres of beans, you've got a major problem. So this number that they're using in here is silly. It's not accounting for anything that that the other fundamentals, that the recorded data that we're getting is really showing. So the USDA is trying to defend the corn balance sheet. That's the conclusion. It's holding this 10% threshold, and I think it's doing that on purpose, because it wants things to be orderly and it wants the market to try to figure it out. But remember, the futures market's responsibility is to price in current fundamentals and then discount future. So what we're seeing is a sell-off based on what the USDA said would happen, which is somewhere in the realm of this possibility, right? Which is somewhere between 1.5 billion and a 2 billion bushel balance sheet. Once we price that in, and I think we're really close to getting that done, once we're done with that, then we've got to start discounting the future probability of weather events and start reconciling the fact that China just bought 8 million metric tons of new crop corn that the USDA didn't have on their balance sheet, and that they've bought 300% more corn this year so far that they did last year at this time. We've got to start discounting the probability that that might actually happen. And remember, before you can really accelerate a market faster, sometimes you've got to break a market before you can rally it. And nothing is better and healthier for a market to see open interest decline into a big sell-off and have the funds get moved to the sideline. It's setting up for something much larger, and we've got way too much room to go before we get overly nervous. So that is what I've got for you today. I think we got to keep our wits about us. I think we got to keep our minds open to the fact that daily ranges are going to continue to get bigger. 30 cents in corn, we're probably headed to something like 50 a day in corn. We're probably going to start trading 75 to $1 in beans, and we're going to be that way for a while until we kind of get through this issue, because typically the balance sheets don't have this much swing in them. I mean, think about it. We typically, we might manipulate numbers up here, and these things might switch 200-300 million bushels. Guys, we're switching billions of bushels at a time with relatively small changes, right? I mean, we're switching billions at a time. So the way I think about it is every 100 million bushels below 1.3 billion, you're going to add $1 in price or more to the corn price. So you got way too much upside and limited downside given the situation and the fundamentals that we've got. So that's where I'm at today. If you have questions, please call us. More than happy to talk through it. And but again, our job is to have a view, and that's the view for the week. I hope you guys have a great day. We will talk to you soon. Remember, there's always risk when you're trading futures and options. If you're going to trade them, you should only do so in with positions and in light of your own financial condition and your own risk tolerances. I hope you have a great day. We'll talk to you next week.